Yeah. I think you can start. We cannot hear you, Dr. Khadija. Dr. Iddrisu. We are
Hello,
live
are
now.
we alive now?
Yeah. Mhm.
Are we the only people, or we have some people already joining?
They've joined, but they cannot be in the studio. I can see them on the screen, but you cannot see them because I'm hosting. And
All right,
they can only share via the comment section. They can ask their questions via the comment section.
all right, that's fine. So we can start now. Good evening, good afternoon, good morning, depending on where you are joining in. If you're joining here, I give you the good news that you and I are lucky today because we are having somebody to help us learn, relearn, and unlearn everything that affects us regarding tax in between. And you and I know in the past few years, if you are an African, especially Ghanaian, you would have been interested in what taxes are about. Today, we are doing a very interesting topic on how to maximize on our tax savings or things to do to get the best out of the taxes we pay as citizens. Being you are a business, an individual just like me, a company, this conversation is going to be beneficial. But we cannot do it except we bring somebody who don't only learn, but a passionate with so much experience who drove strategies across Africa and beyond to make impact. Join me, welcome our speaker for today with a brief introduction. He's a current manager, regional manager Africa for Yinsim Productions. He's an energy tax expert and aspiring global tax counsel with leadership roles across Francophone, Anglophone, and Lusophone Africa. He drives strategy, operations, and team building in Europe, Asia, and America. He previously served as a business and tax advisor at our very famous PwC and KPMG for 6 consecutive years. He's passionate about tax laws. He's a multiple award winning tax expert who do not always preach tax, but you can see from the brief I have given that he has his track records that has made impact. So today, if we are here, we want to share in that glory to help us and humanity to get the best out of everything we pay as citizens, as businesses, as corporations. Please let's welcome Mr. Oduro to give us a lecture first, and then we can come in with our questions later to further appreciate what we are discussing today. In fact, tax is a broad area, and he might have to come back later. And you know, some of us are not even aware of the basics. You ask somebody whether they are aware of rent tax, property tax, and then they tell you, what is that? How do I use my money to build my house and I also have to pay? Today, Mr. Drew is dashing us as a bonus that he still want me and you to know the basics before we come to our main topic, where we would what? Not only ask questions, but questions that matters. Welcome, Mr. Dixon Odro. Mr. Dixon Odro, your audience, your expert, and your aspiring tax legal counsel.
Thank you very much, Dr. Iddrisu. That was a lot of detail for an introduction. Yeah. And I think, like you mentioned, tax is a very broad discipline or area. But as much as possible, we'll try and make this conversational, even though I'm the only one speaking here. There'll be room for people to ask questions so that we can delve deeper. If you have peculiar issues, wherever you are, we can also discuss that. You cannot get it wrong if you say good day. So wherever you are, good day to you. Whatever your time zone is, good day. And thanks for joining us. And I hope that this few minutes or few hours will be worth your while. So taxes. Um, First, I'll start the presentation by giving some definition of what taxes. This is not going to be academic, it will be very practical. Then, because you are all interested in how we can save or reduce taxes, we'll talk about the nature of tax itself and the nature of tax planning, and what are the forms of tax planning that can be availed to whomever is interested in a tax planning opportunity. Then we will also consider some form of taxes, right? Because if you are able to identify the tax right, then it means you can get the antidote. So it's just like being attacked by a poisonous reptile. You need to get to know what venom has been put into your body, then you get the antidote. So we will have some lecture or discussion around what are the forms of taxes. Most of these conversations will be localized to Ghana, because we understand that most of our viewers or audience happen to be Ghanaian residents or Ghanaian citizens. But some of the principles are far reaching, they do not just apply to Ghana. So, wherever you are, I'm sure you could also glean some useful lessons from what we share here. But what that would just mean is that if I make reference to a certain rate here, that rate is applicable to Ghana. And if you're in a different jurisdiction, you just need to check over there if one, that tax is applicable there, if that opportunity for tax planning is also available there, and what rate is applicable. Right, then we will have the most important conversation of all, the typical Ghanaian tax planning opportunities that can be afforded us. So beyond discussing the theory and what has been provided for in law, we will now go into the specifics, what can be done for a tax benefit to um, be available or to enjoy that tax benefit. So right from the very beginning, I'll start with what qualifies as tax. And I should mention that it's very difficult for scholars to define what tax is. So we just take utterances by famous people and utterances that kind of feel very real and relevant. So I'll just give two quotes. One from Oliver Wendell Holmes, he was a justice or a judge, and another from an American statesman, Benjamin Franklin. So first, I'll start with Benjamin Franklin's definition of tax. He did not really define what tax is. He just defined the nature of tax. And he said, in this world, nothing is certain with the exception of death and taxes. So according to Benjamin Franklin, if you are worried about the fact that you die, you should also be worried about the fact that wherever you are under the sun, you will be affected in one way or the other by some form of tax or levy. So he does not necessarily define what tax is, but he just says that tax is so certain and far reaching that you just cannot do without it. And he puts tax and death on the same scale. Then Oliver Wendell Holmes Jr. defines tax as the price that we pay to be part of a civilized society. Put differently, taxes are the price that we pay to be part of civilization. So if you are happy to enjoy your property, if you are happy to enjoy your meal without fear that a burglar will come to your home and take something from you, why do you have that confidence that you can enjoy your properties? You can even enjoy your life. It's because there's police. Someone is paying the police. Certainly not you, but somehow you are part of the police paying machinery because you pay taxes to the state and the state is able to maintain the civilization. So this is just to kind of sensitize us all that tax is not necessarily a very bad thing. Tax is, I dare say, a very good thing. So if you are thinking of tax, it's not something that is just taking your resources away, but it takes something from you, yes, and it affords you something else. Yes, there's the conversation around, especially in the third world countries, and what their taxes are used for. So a couple of times you hear people saying, my roads are so bad. Why do I even pay taxes? Your taxes are going into something else. But yes, the politicians or the government could do better. So setting the stage with the definition of tax and the fact that tax is important for every civilization, now we move on to what qualifies as wealth. And I think it's very necessary that we keep this in mind as we go through this presentation. Ordinarily, anytime we talk about wealth, people will think about the money that comes to them. But wealth goes beyond that. If you have a property, if you are talking about your net worth, that qualifies as part of your wealth as well. I'm saying this because later in my presentation, I will talk about making contributions to a pension fund as a form of a tax benefit or a tax planning opportunity. And you might think, but the money that is coming to me at the end of the month is relatively lower if I did not embark on this Dixon advised tax planning opportunity. But think of your wealth as not just the net salary hitting your account, but also the monies that you are putting somewhere, which will subsequently be available to you. So if there's room for you to put that money there so that it's not taxed, don't just think about the reduced salary that comes to you. Add that amount there plus whatever interest that you accrue, and because we've already talked about making passive investments and all that, yeah. So the actual benefit to you or the true wealth that you have created is what has entered your pocket or your bank account and what you put there in your pension savings. Yeah. Okay, so now we move on to what is tax. We have defined it from the academic perspective, but tax is a legal instrument. So you hear tax practitioners or tax counsels or lawyers saying that tax is a creation of law. So wherever you are part of a constitutional system, a government, and that government rules by either issuing acts of parliament or decrees or codes. Some jurisdictions call their laws codes. So the moment you put it in law, it becomes mandatory for people to comply. So taxes are supposed to be creation of law. So any levy that the government want to take from their citizens should necessarily be put in writing as a form of law. So if someone wakes up one day and thinks that, oh, there could be tax on maybe just walking around, until that person passes a law, that person cannot take any money from anyone. It is important that this is put in law. Why? Because number one, it will afford the parliamentarians or the lawmakers the opportunity to deliberate whether this tax can necessarily help. I'm tempted to use the e-levy example, but I'll resist that
Or
temptation
later.
for later, certainly. Yes. So the other consideration or reason for putting it in law or in writing is for certainty. So that if anyone is just like a travel guide, if you are going to China, if you are going to Japan, Russia, you will certainly read a travel guide where you can go, where you cannot go, even when you are visiting us down here. So similarly, if that thing is in writing and someone wants to undertake a venture or earn some form of income in your jurisdiction, the person is very certain or clear in his mind that if I do this in Ghana, these are the levies that I will have to deal with. Yeah. So number one, tax is a creation of law. So that also means that to identify a tax opportunity, you need to look back to that law. And if you look back to that law, there are two ways that you can identify or you can get a tax saving opportunity or tax planning opportunity or incentive. Number one is what has specifically been written as a tax planning opportunity. So some jurisdictions will specifically put in there that, let's say, being a president of a country affords you a tax exemption status. We actually have that in Ghana. So the salary of our excellency is exempted from income tax. So this planning opportunity or tax incentive has specifically been put in there. There's also exemption for those who venture into cocoa farming. We'll go into details later. But the first opportunity to identify a tax incentive is to look back to the law that created whatever body of taxes that you have in that jurisdiction. Then number two is by looking at that law, you can also identify activities or incomes that are necessarily out of scope of that law. So we say that it's only God that can set up a universal law. Whatever law that is set up by human beings will certainly have a loophole. So if you go back to the tax law and the drafters are not smart enough to capture everything in that tax law, what that means is wherever and what we call the peripheries, wherever they did not touch, that is necessarily exempted or out of scope of that tax law. So you can play within that region and do not have to bother about tax. So in that region, you are like a zombie. You are dead, but you are not dead. So tax is a certainty, but it's not really applying to you. Then we come to, so what are the types of tax planning? If I go into the law, how would I be able to identify those tax planning opportunities? Before I go into that, I want to clarify some definition because I'll be using this term a lot so that it does not confuse anyone.
That's fine.
I'll use person a lot in my presentation. In tax or in law, a person is not just someone born of a woman. A person qualifies as an individual, that is a natural person. So I am an individual. Dr. Iddrisu is an individual. If I talk about a person, I'm referring to someone like her and someone like me. According to tax, a person could also be an entity. I'm sure when you were dealing with investing and creating wealth, you also discuss how people can set up businesses, either a company limited by guarantee, company limited by shares, set up partnerships, or set up sole proprietorships. Some can even do trusts. So a person in tax terms could also refer to that entity. So it's very important that we keep it in mind. And it's also helpful in identifying the tax planning opportunities because, like I said earlier, the president of Ghana, an individual, is afforded income tax exemption on his presidential salary and allowances. An entity cannot be a president of Ghana. So if you are looking for that kind of benefit, you know that the way to go about it is not to set up an entity, hoping that that entity becomes president of Ghana. That exemption or benefit is only available to an individual. So it's helpful that we keep that in mind. So now back to the tax planning forms. The first one that we deal with is the type of the person or the entity. I already gave an example of the type of the person, and one is the president of Ghana. I won't belabor his benefit, but another is there's a benefit that goes for, let's say, someone who is physically challenged. So just because of being himself or herself, that person is afforded a tax benefit. If you want to get that benefit, you necessarily need to put yourself in a happenstance similar to that person. So if this is given to, let's say, someone that is amputated, you cannot go walking on all limbs looking for that benefit. You are not that person, so you cannot get it. Then let's look at entities still under the type of person. There are some entities that are afforded some tax benefits. An example is a rural bank. So yes, rural banks give loans and we say they buy and sell cash, right? They give loans and they also take people's deposits. That's also some kind of loan that you are giving to the bank, because at the end of the day, they give you interest, right? Um, you cannot say because banks also do a similar thing, they should be given that benefit. They are just not a rural bank tax personality. So there are some benefits that are afforded based on your personality. And again, whether you're an individual or you are an entity, right? Then the second one has to do location. Sometimes by the mere fact of where you are affords you a lot of benefits. If you're a manufacturing company and you choose to go to Media or Amasaman, automatically you get tax benefits. But if you decide to be in the heart of the city where there is life, drama, then that tax benefit is taken away from you. So just by the mere case of being around a place outside, let's say Accra or Tema, you get to have that benefit. Still talking about location, there is another region in Ghana that we call the Savannah Ecological Zone. And that was, if you made the previous three regions, I'm sure a lot of people are also having challenges picking up the 16 regions that Ghana has now. So the previous three northern regions, so now I think there are six or five, yeah. Um, they are also afforded some benefits, but then you need to be there. So if you have money and you want a benefit based on a location, you cannot just set up wherever you want. You necessarily need to be in that location, and that benefit will be given to you. Then the third bit is activity. What are you undertaking? Activity kind of transcends the other tax planning forms as well, because the rural bank example that I used, for instance, they are into rural banking, that's an activity, right? The manufacturing example that I used, they are into manufacturing. There are some that cover, let's say, farming, whether tree crops or livestock. There are some that cover um, there are some that cover manufacturing, agro processing. Because of the activity that you are undertaking, you get that benefit. Then the final one is a tax planning opportunity that is afforded you because of time. So some um, activities are exempted from tax or given a very low tax rate. You don't have to pay the very high one, maybe for 5 years, some for 7 years, some for 10 years, right? So you need to enter at the right time. And once that time has elapsed, that tax benefit is no longer available. During COVID, some tax benefits were afforded. It was just situated within the confines of the
Situation.
COVID period. Once COVID was over, that tax benefit also elapsed as well. So what this tells us is that you really need to have like your searchlight on, looking everywhere for an opportunity to be able to manage your taxes. I think anytime you are thinking about tax planning, I like to advise people to think about how we plan to bring babies into the world. So you plan the baby, where the baby will be born. Some do birth tourism. They want the babies to be born in, let's say, Canada, wherever, so that they get citizenship, yeah, or passport. So think of tax planning as such, because sometimes it's just how you set up your entity or set up your business. That is how you get to benefit from that tax planning measure. Right, then these are additional, let me say, forms that I have personally added. Number one, but a lot of scholars also agree, and they say it almost every time. Number one is tax compliance is actually the best form of tax planning. What the law has said that you should do just that, and you would have saved yourself a lot of stress. Why? Because if you don't do it and the government wants to punish you, the government thinks of the punishment this way. Number one, you have failed to do something. For that, there's a penalty. That's the first. Then the second one is, if you fail to bring due tax to me, the government thinks of it as you used my money to invest, so you have gotten some returns. So if I'm coming for my money from you, I'm taking the money together with whatever returns that you've earned. But the government has gone ahead to give a formula for calculating those returns or interest. And trust me, it's so high that even if you were putting the money in men's gold, you will not get a lot of returns to be
To
able
be
to
able
pay
to
the
pay.
government off plus the punitive measure. So the best form of tax planning, number one, is to comply. Then number two is documentation, especially for the owners of SMEs. It is super important that you document everything that the business is doing, because it is on that basis that you'll be able to obtain all the tax benefits that you need. Just imagine you set up a rural bank, but you've lost your certificate, like the rural banking certificate or license, and the revenue authority comes to take money from you like they would take from a bank, and you tell them, I'm a rural bank. What is your document to prove that indeed you are a rural bank? You don't have that available. So that could also be another form that we think of, right? Then the other thing too is, if you don't have documentation, you'll be subjected to what we call presumptive tax. Um, I think we all might have seen something like that. If you bought a trotro or if you bought a commercial vehicle, they have this sticker at the front of the windscreen, affixed to the windscreen. Number one, it's not insurance. Number two, it's not roadworthy. It's like a third sticker. We call it VIT, vehicle income tax. I mean, the idea is that these people cannot, and their conductors cannot keep records. So there's a tax law that just says that, okay, if you operate a car with this capacity, then this is how much you pay every quarter. So presumptive tax, they just presume for you that this is the tax that you have to pay. And there is no tax planning within presumptive taxation. There is no tax planning within presumptive taxation, because um, I mean, your tax obligation or your tax liability has been assumed for you. So it's like you told them, I'm not capable of assessing my own taxes. So the government has assumed that tax for you. And once that is assumed for you, you just have to pay, and there is no room, absolutely no room for you to get any tax planning incentive. So it's very important that you keep documents so that you can be afforded those tax planning opportunities. Now we look at forms of taxes. Yes, we've been talking about tax planning, but now what are the kind of taxes that we are subject to, especially here in Ghana? And there are just two major forms, and there is a third form that cannot really identify as A or B, right? So you could say that there are three forms. The first one is what we call direct taxes. Direct taxes, as the name implies, is very direct. These taxes, they attach themselves to income and wealth. So if you are earning income, these taxes will attach themselves to you. If you're in employment, you earn salary, you earn allowances. Employment income tax, a form of direct tax, will attach itself to the employment income that you are earning. Direct taxes could also attach themselves to wealth. If you have wealth, you could pay direct taxes. And I'll cite an example. An example is property tax. Property tax is applicable just by the mere fact of owning a property. Not long ago, they tried to introduce a certain form of tax. I think the old term is it Lampo or something? Um, but it was something that we needed. It was more like a TV license that we needed to pay to GBC. And they said if you don't pay that, you don't get access to GTV. And people were just walking around checking to see if you have an antenna.
Is it TV license?
I think so. Yeah. So you could say that these are also direct taxes because they attach themselves to the fact that you have
You
wealth.
have a
Because
TV.
if you can own a TV, then you are wealthy enough to acquire TV in that TV context. So you get to pay that tax. So those are direct taxes. And a lot of our conversation today has really bordered on direct taxes. Then there is what we call indirect taxes. So they are indirect. What do they attach themselves to? They attach themselves to consumption, what you consume, and they attach themselves to transactions. So an example is, let's say, VAT, or tourism levy. Tourism levy is applicable to tourism. So if you go to a hotel, if you go to a club, if you go to a restaurant and you order meal, drink, whatever you do over there, there is a tourism levy. So if you don't consume that service, you do not get to pay those taxes. So some people will choose to go to Cantamanto and buy groceries because those women will not charge any VAT. But if you happen to go to, let's say, the mall, you pay the VAT. Do you get it? Because that is the very formalized sector of the economy. So if you don't consume from the mall, you don't get to pay those kind of taxes. Then on transactions, the famous example, e-levy. If you don't do electronic mobile transaction or a bank transfer, you do not suffer that tax. So the best form of planning your taxes around these indirect taxes is sans consumption, sans transaction. That is, without consumption and without transaction, you do not have to bear these kind of taxes.
Which is
But
impossible.
which is impossible. But then again, when you have to bear some of these kind of taxes, then you think about why you pay tax. You pay tax as a price for enjoying this civilization, this beautiful city that you reside in. Then there are the in-betweens. They can easily qualify for direct taxes and can easily qualify for indirect taxes. They could also easily be said not to be equal to direct taxes, and same for indirect taxes. Yes, Dr. Iddrisu, please go on.
Yeah, so that's a big thing. When you were talking about savings
Hmm.
in tax, you omitted something important, and I want to bring it to your attention.
Yeah, sure.
That in Africa, we do not give a damn about expert advice. That you see somebody having everything to establish a business, but forgot to bring on a team, a tax advisor like
Yeah,
yourself.
yeah,
So even though he was telling us we should comply and few other things, everybody has their sphere in which they are what? Knowledgeable.
hmm,
You cannot know it all as a person. In fact, when you have a PhD in finance, it's not that you know everything in finance. It's just a specialty in some sphere. In zoology, archaeology, it's universal. We do
hmm,
not take seriousness when it comes to whatever you are giving to us free today, that it should be an essential part of even starting up our businesses or even planning our lives. Somewhere in the world is different. As soon as they get a $10,000 and they are planning on something, they want to seek the advice from the accountant, the tax expert, this, that. In doing so, they guide them because you cannot know it all. That is their field with a little fee. But in Africa, it's not easy getting these businesses controlled. So, Mr. Dixon, kind of forget that. But I'm telling you that if you want a tax advisor, with just the bet we have done, you know that you need him to pay a little fee and he'll give you what he has been learning like forever. Thank you. You can continue.
All right, Dr. Iddrisu, thank you very much. I hope my employer doesn't get to watch this video.
No, 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 no. we
Right.
call
Okay.
this
But
we call this galamsey as academics. So when
yeah,
dear employer,
yeah.
when you come across this, know that we have galamsey in certain aspects.
Right.
Yes.
Thank you very much. So, and thanks for pointing it out. I mean,
Yeah.
it's very important
Yeah.
to consider tax as part of the factors um, um, needed to set out any venture. So, in my concluding remarks, I'll come back to what you just said because there are a
Thank you.
few other things that I recommend as well. Yeah, but thanks
Thank
so
you.
much for bringing this up. Right.
Thank you, Dr. Dixon.
So, now we are done with the forms of taxes, the direct taxes attaching themselves to
Mm-hmm.
income and wealth, indirect taxes attaching themselves to consumption and transactions,
In the in
and
between.
the in between. And an example is if you are in Europe, for instance, Ghana is very difficult to find one that is non-binary. I mean, Ghana, we are very discrete, black and white, that kind of thing. So direct, indirect, yeah. But in Europe, they have some levies or taxes on foreign currency exchange, right? So if you are changing money from, let's say, USD to Euro or from GBP to Euro, beyond the exchange rate they'll give you, there's an adjustment for a tax as well. So it has been a raging issue for scholars. Does this really qualify as direct tax? Is it because I hold that money? That is why I get to pay that tax, in which case it will be wealth tax, direct tax? Or is it
Mm.
because I made the mistake to change that money, in which case it will be like a transaction tax, which is indirect tax? So scholars are not so
So,
sure where they put it, right? So now enough of the hybrid academic conversation and the practical conversation, but now we are coming right down to our level in Ghana. So when we were talking, or when I was earlier making the introductory presentation, I did mention that your taxes could be on income, on wealth. Ghana, our wealth taxes are not very robust, so I won't really focus on that. We've been trying forever to implement a very workable property rate collection system or structure, and it's been quite difficult. So I'll rather focus on income. Then I will touch briefly on the indirect taxes as well, because that's also important to those that are into businesses, right? But the bunch of our time will be used for deliberating income. So in Ghana, before you can pay tax, number one, you need to earn income. Again, similar to definition for tax, definition for income has been very evasive. We are struggling to define what qualifies as income. So what Ghanaian legislators has been able to do is to rather define where we think that you could be earning income from. So rather than defining what income is, they just define where we think you can get income from. So it's just like, what is life? It's difficult to define what life is. But you can just say that if you see someone working, it means that person has life. And if someone is lying idle, dead, not breathing, it means that person is without life. So similar analogy applies here, right? So in Ghana, you can earn income from three sources. Number one is income from employment. And we go back to tax personality. An entity cannot be in employment. Only a man or a person born of a woman can be in employment. So employment income can only be earned by an individual. An entity does not qualify over here. The second source is business. So you can earn income from a business. With this, the two persons of tax could earn business income. So if you have your own, we typically like this Oduro ventures. We like to put our name on it, then we add ventures. It is a business that you are running, but who is running that business? You, the individual. Because it's merely a sole proprietorship, that business is not separate from you. The moment you decide to leave the country or to leave this world, that is the end of the business, because the business is tied to you. So an individual can get business income. Similarly, an entity that has been established, whether a company, a partnership, or whatever, can also earn business income. So we set up a bank, and the bank undertakes banking transactions, and they get income. That income, first and foremost, goes to the bank as an entity. Then taxes will be assessed before later. If, let's say, they pay dividends to their shareholders, individuals or other companies, we will also consider that as another layer of tax. Then the final bit is investment. You can also get income from investment. So if you do T-bill, if you get interest rates or interest income, on your fixed deposit at the bank, that qualifies as income from investment. So you are not actively partaking in what is generating the income. You just put your money there, then your money works for you. So whatever the returns are, those also qualify as income because they are coming from investment. So simply put, any gain, profit, or benefit that you get from employment, business, or investment is subject to income tax in Ghana. Right. So now let's go into these sources and identify some very typical tax planning opportunities that can be afforded you based on that source of income. Again, this is not exhaustive. I've kind of picked up the salient ones in the Ghana Tax Act, Ghana Income Tax Act. This is just on income. We'll talk about indirect taxes later. This is not everything, but we do not have a lot of time, so I will rush through. But then if you are able to get an interaction, maybe in person or another session, then we can drill down into the other benefit that I did not mention, right? So the first one, and a lot of people are not taking advantage of it, but I think people should. If you are in employment, or if you're an individual, there is an opportunity for you to get a tax benefit on interest that you pay on a loan that you have taken to build your first home. So a lot of us are interested to get our own place. And Ghanaians would typically want to build or they want to buy. Your first home, if you do not have immediate cash now to buy that first home or to build that first home, I'll come back to this preamble, and you go to a bank for either a mortgage or you take the cash yourself and you build, the interest that you pay on that loan, if you are in employment, you are allowed to deduct that interest from your employment income. Because mind you, all your employment income with minor deductions will be subjected to tax. But this benefit allows you to deduct the interest from that salary. So I'll cite examples with a lot of zeros. Assuming your income after deduction of everything, pensions, and I'll talk about pensions later, is 10,000, and you have gone for a loan, and on a monthly basis you are paying like 8,000 as interest. What the tax law is saying is that you can deduct this 8,000 from the 10,000 income you've earned and pay taxes on only 2,000. The only thing you need to show to your employer or the accountant or the tax manager or whomever is processing your payroll is that loan agreement or that mortgage deed to evidence that you did not take that money for maybe a saloon car or for a drive and you want to get that interest. So the government is interested in people having homes, and your first home, you can get that benefit. The next question will be, okay, what if I've already built my house, but then I did not take that benefit? The law says your first home. So if you built your first house and you did not bring it to the law to get a benefit, the law does not know that house. So even if you are now building your third, 13th, or 20th house, you can still come for that benefit. But what that means is you get a benefit only once.
Yeah.
So please, if you are going for this benefit, go big. Go big. And you don't need any special approval from the revenue authority to do this. You just need to provide evidence to the one running your payroll at the company, and you get a benefit. If your salary is lower than the interest you are paying, it means automatically you don't even get to pay any taxes. So you get your money unencumbered with any Ghanaian income tax. Number two is what we call personal reliefs. So just by being an individual, there are some reliefs that can be given to you. They are not so huge, but it's worth the application. That one you have to apply. It's not a lot of stress. You can walk to any GRA office. Sorry, GRA is Ghana Revenue Authority. The tax authority, you can walk to any office, get a form and fill. So number one, there is a benefit for being responsible. And being responsible means maybe you take care of two kids. That is the Ghanaian tax definition of someone who is responsible. Or you are married. So if you are married or you take care of two children, you are afforded what we call responsibility relief. Okay. And that relief is expected to be deducted from your income. So I think 2,000. So what that means is you can deduct that 2,000 from your income, and what is left is what you pay taxes on. So that benefit kind of reduces your tax obligation. So either you're married or you have two kids, you are afforded that responsibility allowance or relief, personal relief. Number two, if you have kids, you can get personal release for your kids' education. So if you are supporting them in any school, it doesn't matter whether they've gone to a Saito school or a private school or wherever. It just needs to be a Ghanaian school that is recognized, right? And you have that benefit for up to 3 children. So you can get benefits for child A, B, and C. But if there's D and E, then God for
Yes.
them.
You qualify.
Ghana government does not really care about them. On a light note, yeah. Then there is also a benefit for those that take care of aged dependents. So the idea is that you can get a maximum of 2 because you cannot have more than one mother and you cannot have more than one father, right? So your mom, your dad, you can get a benefit if they are dependent on you. Then there is one for vocational training. So if you are working and you go and take a training that is necessary for the work that you do, the cost that you incur, you get a benefit for that as well, although it's capped. Then the final one, I hope I haven't missed out on anything. But the best of all is disability relief. So if you have any form of disability, as confirmed by the Department of Social Works, welfare, social welfare, yes, good. Then whatever income that you earn, a quarter of that will come to you free of charge without any tax. So if your salary or net income is, let's say, without taxes, of course, is 20,000, then the government is saying that 5,000 of that comes to you free of charge. I won't tax you. Then it's only the 15,000 that is left that I will tax you. I'm particularly interested in this kind of relief, because that's quite huge. It can be a lot of money. But the question is what qualifies as disability? And the requirement is that you need to get clearance from the Department of Social Welfare that indeed you have that disability, right? Then I move on from the personal release. Now I go to pension contributions. So now still back to the earlier definition of wealth. So the law allows you to contribute up to 35% of your salary, basic salary, to pension contributions, and that will not be taxed. So if you trust the Ghana pension system enough, I think that it is very helpful that you push that 35% into the pension fund and receive the remaining 65% and suffer taxes on the 65%. Because mind you, if let's say you only make contributions towards the mandatory schemes, that is tier 1 and tier 2, and you don't do, and that is up to cumulatively up to 18.5%. So if you don't top up to a provident fund by 16.5%, which will add to the 18.5 to make 35, and you take that money, they will tax you. Some of you are subjected to tax at 35%, some are subjected to tax at 30%, some 25, 20. So Ghana, if you're an individual, your tax rates range from 0 to 35. And 35 is for those that earn beyond 605,000 Ghana cedis in a year. So on a monthly basis, that's like earning 50,400 and I think 16.67. That's 35%. Then beyond 20,000 to this 50,416.67 is 30%. Then a bit below 25, all the way to 0%, which is applicable to the minimum wage. So if you get to the minimum wage, you don't get to pay any taxes at all. So I think that you can push the monies to the pension schemes, then suffer the outrageous taxes on the 65 that is left. The good thing is if you put money in a provident fund, you just need to wait for 10 years. You don't have to wait till pension to go for that money, and you don't have to suffer any taxes. However, if you are not patient enough and you go in for those monies before 10 years, and it's even 10 years since you started contributing. So it's not when the money comes in, the money needs to stay in for 10 years. So let's assume that I started contributing in 2017. What that means is latest by 2026, sorry, 17 to
27.
18, oh, 27,
Yeah.
yes. I can go for all the money, including the ones that I contributed during 2026 December, because all the monies are in the same pool, and I have 10 years and I can take that money. Even if you are not patient enough and you want to take the money, you are subjected to tax at 15%. So think about it this way. You are a very high earner and you would have paid taxes at 35 anyways. If you put it in the provident fund and wait for just 1 week, even 1 day, and go for that money, you'll be subjected to tax at 15%. How much of a savings is this? 20%. So that is also something that people can look into. And it's super legal. There is no illegality in that, right? Then for an individual in employment too, rather than always pushing for cash, sometimes you can push for benefits in kind. So rather than taking a transportation allowance, you can rather ask for maybe the Tom card from Shell or the Goyle fuel card. Because according to law, if you get a fuel benefit, the valuation of that fuel benefit is only 625 cedis. So assuming that the benefit on the card is, let's say, 2,000, what the law is saying is that I save you 1,375 cedis. You don't pay taxes on that. You get to pay taxes on only 625. So it's still the cash allowance that your employer is giving you, but this time around you are not taking it as fiscal cash, because the moment you take it as fiscal cash, you're looking at between that 0 to 35%, and you will likely fall within the 20-25 to 35% region, right? Then If there is scope for the employer to rather rent for you, especially if the work that you do require that you are close to where your office is, I would rather you opted for the employer paying that rent on your behalf than you taking the cash to go and pay that rent. Because before that cash will come to you, it would have suffered those taxes from the 0% to the 35% region. So these are some very basic tax planning opportunities available to individuals and or employees. There's still some more. Again, when we get another opportunity, we'll talk through them. But now let's quickly move to business. If you are into business, let me start with the benefit for young entrepreneurs. So there is a benefit for young entrepreneurs to be exempt from tax. You don't even pay 1%. And mind you, Ghana tax rates hovers around 25%. On top of that, pay taxes at 30% on their profit, right? But then if you're a young entrepreneur and you enter into some specific industries, you are exempted from tax. So whatever profit that comes to you is fully yours. And these are the industries. If you go into manufacturing, if you go into information and communications technology, we have a lot of IT specialists here. If you go into agro processing, energy production, waste processing, in the heat of ESG, this is something that a lot of people are also looking into. And if you go into tourism and creative arts, horticulture and medicinal plants, I mean, you want to get some flowers so that during Valentine and birthday, people can buy for their loved ones. If you go in there for the first 5 years, you don't get to pay any taxes at all. So if you have money and you just want to enter into something, don't just enter blindly, like Dr. Iddrisu mentioned earlier. Sometimes just consulting can save you a lot of money. But because you have money, you just enter into maybe a solo business, and that may not necessarily qualify for any benefits. And because there is a raging argument that does that qualify under agro processing, it appears not, because it's agro um, um, material. I mean, the BSAP and those things
Yeah,
that we
yeah.
herbs, yeah. So that is it. You get exemption for 5 years. You don't pay any taxes. But then who is a young entrepreneur? A young entrepreneur is anyone who is not more than 35 years old. So what are the tax planning opportunities around this if you are older? It just means if you have a very decent idea and you have a trusted sibling. I won't recommend friends yet because Ghanaians are known for, yeah. If you have a very trusted sibling, if you have a trusted child, um, instead of you running the business
Put
and
it in
getting
your
to
name.
pay the taxes, you can still be the brain behind that business, but you let the face and the owner of that business be that child, or whomever. But then that child should have capacity from a legal perspective to be able to run that business. It could also be a consideration in marriages. I mean, instead of always going for the August, you can consider someone who is quite younger. You share your business idea with the person because now you guys are partners. Then that person goes into that business and you get that benefit. So you don't necessarily have to be the one running the show. If you are beyond the 35 years old, you can get someone else, feed that person with the right business plan, and the person will run with it, and you save taxes for that 5 year period, right? Then there are also some activities that when you undertake, you are exempted from tax. An example is cocoa farming. Ghana, we want to retake our spot from Ivory Coast, so the government is incentivizing farmers to venture into cocoa farming, and whatever you get is exempt from tax indefinitely until another law comes to say that no, you have to pay taxes. Um, then, if you go into rural bank, and I think I already cited that as an example, if you have money Rather than doing a savings and loans, because rural banks and savings and loans, they pretty much target the same people or similar people, I should say. So rather than starting a savings and loans, you could use those same monies because you don't have a lot of financial muscle to get to the banking level, like the commercial banking level, right? So rather than doing savings and loans, go into rural banking rather. Previously it was 1%, but now it's 5% for I think a period of 10 years. Yeah. Then there are also other farming concessions. Why do we say they are concessions? Because they are merely temporary. Like you are not fully exempted from tax, but you get to pay some form of taxes, right? Previously it was 1%, now it's 5%. So if you enter into the business of farming tree crops, if you enter into the business of raising livestock, if you enter into the business of agro processing, um, then you get those kind of benefits. You pay low taxes, some for a period of 5 years, some for a period of 10 years. Then another thing too is to venture into manufacturing because like I mentioned, if you are in a manufacturing company, and that's actually the reason why you will find a lot of those energy drinks and soft drinks guys around the mid-year Amasaman area. Because if you're a manufacturing company and you are situated in Accra or Tema, you don't get
Pollution.
any tax benefits. But the moment you leave Accra or Tema, you get some benefits. When you are within a a regional capital, still other than Accra, because Accra and Tema have been scoped out, you don't get any benefits.
Yeah.
There's also, if you are located outside that scope, there's also some benefits that you get. So let's say you have a timber processing plant, rather than situating that in, let's say, the heart of Kumasi, you can do it somewhere around Sokoban Wood Village, somewhere around Atonsu, not necessarily the heart of Kumasi. Benefits for situating your business there. I mean, this is largely for, let me say, high tech businesses, but for SMEs, the things that we are looking at are largely the farming concessions, the livestock concessions, the agro processing, the waste processing concessions, and also a bit of manufacturing, depending on what the idea is. But more importantly, what is important to me here is the young entrepreneurs benefit. You get tax exemption for 5 years, and again, you don't need to be the one running the show. If you have a good idea but you have gray hair, you can always enroll someone, and the person is just coming on board because you want to shop for this kind of tax benefit. Then let me quickly introduce
All right, Mr.
some,
Dixon.
yes.
Even though we would have wait till later, but I think you could just speak on that for Mr. Loud Kumsin. Um, I want you to tell him he's asking with the year regarding the young entrepreneurs waivers for tax. How does one apply to benefit? Work to GRE? How, please? So I think
Right.
you can just speak
Okay,
to them.
so number one, ordinarily Ghanaian taxation system is a self-assessment system. By that, what I mean is once it's provided for in law, if it's not specifically mentioned that you need to follow a certain form or procedure, what that means is if it's not specifically mentioned, then it means you can just sit in your home, sit in your business, and apply it, right? The only problem is that if you are running a business, GRA can come later, right? GRA does not have access to your passport or anything of that sort. And we are in Ghana where people can even change their names, can bear multiple passports, multiple names and all. So even when you are able to produce that evidence, they could say that, oh, it's doctored, right? So strictly according to law, you don't really have to do anything. But just to enjoy the full benefits of this young entrepreneurs tax incentive, the advice that we typically give is that when you start the business, either you set up a company, a partnership, or a sole proprietorship, you provided some details as the owner, director, shareholder, right? Once you get the business registered and you have your registration documentation, just write a letter to GRA, not a request for approval, but rather a notification that this is me, these are my
Registration.
um, um, registration documentation, this is my biodata information, that truly I'm only 28 years or 32 years, and this is the object of my business. And that object of your business must be either manufacturing, information and communication technology, agro processing, energy production, waste processing, tourism and creative arts, horticulture, medicinal plants, right? Then you notify them. The reason I'm saying don't ask for approval is it can take forever for them to get back to you. But when you write it in a form of a notification, at least you have something on file and they also have something on file.
Yeah.
Some revenue authority offices, GRA offices, are benevolent enough to respond to your letter.
Yeah.
Okay? If you have that, it means you are foolproof, fully secured against any contention by a tax officer. But even if you don't get that, because when you filed, usually when you are going to the tax authority, send 2 copies, you leave one with them, and you bring the stamped copy. So one is for you, one is for them. You leave theirs with them. Then yours, you get their seal or stamp on it, and you come and put it on file and scan, of course, and put it in a shared drive, on a shared drive. So later, if it becomes an issue, you can always bring out that document that I filed this with you. If you had any issues, you should have commented. And I mean, if you go to the law court, the principle of legitimate expectation will be in your favor. Because if I write you that I want to go left, and you know that I shouldn't go left, but you did not write to me to say that don't go left, and eventually I go left and I get a benefit, you cannot deprive me of that benefit. So according to law, no procedure has really been stated, but then for your own benefit, once you get your registration documentation and your biodata information, which you already have, and birth certificate, passport, Ghana card, any of them, you just write a notification to the relevant notification letter to the relevant tax authority, and you are good to go. But then again, you also need to put a timer on yourself. Once is 35 years plus 1 hour. From that moment, every income is subjected to tax. Yeah.
Yes. Thank you.
Okay. Then, so I think we can wrap up, and we are mostly done. So we are done with business. Again, under the business, there are also several other benefits, but I just highlighted the ones that are relevant to SMEs and like people like us who want to have a side hustle, right? But one major thing I want to mention over here is the concept of VAT. VAT.
Yeah. Yeah.
The truth is, VAT makes things expensive.
Yeah.
But then, VAT is not supposed to make things expensive for a business, because the economic rationalization behind VAT is that it's the final consumer that is supposed to bear the VAT. So, typical example that my lecturer used in the university, I'm going to use a similar thing over here. Is let's assume you buy bread, right? The bread will start from the corn stage to the flour stage to, of course, that will be baked into bread. Then they will put it in the supermarket. Then you go and buy the bread. The idea is that the final VAT should be borne by the guy that is buying and consuming the bread. So you as a businessman is merely supposed to be an agent. So for those of us that are, let's say, promoters, comedians, and whatnot, there's a requirement that even if you are not necessarily running a business, to make you a VAT registrable person, but because you are into entertainment, you're a promoter, you're a comedian, presenter, or what have you, if you earn any income, you are supposed to charge VAT on that amount, right?
Yeah.
That money is not to be paid by you. That money is to be paid by the guy enjoying your services.
Yeah.
So if the guy knows that at the end of the day, the money I want to come to you is 200,000, then the person needs to understand that VAT is coming on top of the 200,000. It's just unfortunate that in Ghana, a lot of people get away with non-compliance. So if you try to become compliant, then you are seen as expensive because it's very difficult to deal with you. But there are benefits in becoming compliant because when you are compliant, you scale up. Trust me, if you want your business to blossom, you have to be tax compliant. Unless, of course, you have a very big man up there that can pull buttons for you. But then if you are under the law and not above the law, then you necessarily need to be tax compliant right from the very beginning. So that when you
Mm-hmm.
become very big, those skeletons in the cupboard will not come back hunting you, right? So if you are running a business, I think it's even helpful beyond the fact that you may need to administratively be filing returns and making reports to the GRA. I think it's actually helpful if you are registered for VAT because what that means is if you buy something and you pay VAT on that something you bought, when you are charging your customer or your client, when they give you VAT money to be given to the government, you can take out of that money all the VAT that you have also paid to other people for the purposes of undertaking your business. So let's say you package food, whatever, but you bought the um, packages, the wrappers, you engage a logistics company and they delivered your products for you. All these people will charge you VAT, right? If you are not registered for VAT, you take the hit of that cost. So if you are taking 200,000 and you don't charge VAT on it, and you bought things for 150,000 and VAT on that is less essentially 20,000, your profit is only 30K. Sorry, yeah, 30,000. Yes. But then if you had charged VAT on top and you got, let's say, VAT of, let's say, 30,000 from your customer, because you paid VAT of 20,000, you can take 20,000 out of that 30,000 and pocket it because it's allowed by law. Then it's only the 10,000 that you remit to the government. So yes, VAT is expensive, but it's only supposed to be expensive for the consumer. So if you are running a business, yes, if you're a consumer and you want to run away from VAT, no problem. You may want to go to Cantamount rather than going to the shopping mall. That's entirely your decision. To plan taxes also means to avoid some taxes when you can.
All
There is
right.
nothing illegal about that, right?
All right.
But in a business, it's better to register so that those expenditures that you make on VAT, you can always get those monies back from your customer. Finally,
Absolutely.
so now done with business. Finally, on investment, I think I won't really belabor this point because Ghanaians, you already do right when it comes to where we put our monies. So some investments afford benefits. An example is the T-bills. So that is you lending to the government, right? Because the government wants a lot of money or a lot of investors, they have put an exemption on the income that you earn. So if you have money and the company says, "Oh, bring me that money, I'll give you, let's say 25%," and government also says, "I'll give you 25%," you better go to government and not go to that company because when that company pays you the 25% interest, they will deduct withholding tax of 8%.
Mm-hmm.
And if that is not treated as a final tax, what that means is you come and add that to all your income and you run through the 0 to 35% again. Do you get it
Mm-hmm.
right? But then again, I mean, who really lends to a company? We are all either buying T-bill or buying the BOG gold coin or whatnot, the
Mm-hmm.
central bank's bills that they issued. Then, if you also give your money to a financial institution, so let's get this clarity right. Earlier, I mentioned if it's the government and a company, go to the government. Now, I'm making another distinction. If it's any random company and a local financial institution, rather give the money to a local financial institution because when you get a local financial institution,
Doc,
okay,
I seek to differ. As a
right,
researcher,
okay,
a reputable local financial institution.
okay,
A
then
random company, maybe it can be from anywhere. Of course, it can be a random company, but I think a reputable because you're not telling me there's a random company coming from Nigeria that I can even trust better than Men's Gold, and I'm giving because they are a local company. So I think reputable because people have been victims of local. These DKM staffs, when we were in university, undergraduate people got duped. I mean, there have been Ponzi schemes and it hasn't stopped.
Yeah.
Right. So I think we reputable doing your checks
Do your
right.
diligence. Yes,
Yeah,
that's
your
right.
due
Yeah.
diligence. Not just, in fact, there are certain random companies that turns out to be good. For instance, I hadn't read so much about Dayless Finance. One
Mm,
time I had it propped up, which I have actually not have an idea. And then somebody came to me with some two options. And then I recommended Dayless Finance based on some few checks I did because I saw they were reputable. And he
mm,
went on and he has not regretted it, right?
yeah.
However, the other one, the alternative that he came by later folder, it was
Mm,
kind of like an e-commerce something, and they had an establishment in East Legon where they did like a transaction. You would deposit some amount, they give you some goods to sell, like digital marketing sort of thing. It was random, it was local, was it reputable? So I think the credibility matters.
yeah.
Yeah.
Yeah. Yeah. Thank you very much for pointing this out. Again, it's your money, so put your money where you can comfortably leave your heart. If your heart will be broken there, certainly you don't leave your money there. Um, so just to quickly land, so a local financial institution, if you give money to them, they are paying you interest. That is also exempted. But then again, I don't really want to rehash because I think pretty much every one of us would rather buy a deposit with a reputable local financial institution, do maybe an M fund. Okay, I retract that because there are some issues with M fund now. So please, I retract. Or maybe buy a T bill. Yeah, but in a sane economy, I mean, M fund is also something, or unit
Yeah.
trust is
Yeah.
also something that you can put your monies in. So we essentially talked about the three sources of Ghanaian income, which is employment, which is business, and which is investment.
Mm.
We identified, let me say, salient tax opportunities, tax,
Available.
yeah, planning opportunities, especially under the employment bit, being an individual, and also under the business bit. Again, this is just a scratch on the surface. There are a lot of things in there. There are some tax benefits that are afforded you just because when you decided to buy something, you delayed for some few days,
Yeah.
you delayed for some few, or you held on for some more years. There is a benefit, especially for companies that are like super up there doing very technical stuff and complex stuff, that instead of maybe buying the shares of a company, you can rather give half of the share value to the company that you're acquiring, so that the asset that the company is using, so let's assume is an oil company, is a mining company, or is a manufacturing company, and that company has a plant. Rather than buying the company and taking over the plant, you can just buy half of the plant, and the old owner will also hold half of the plant. Then after 3 years, you buy the old owner out, because that tax benefit is available when within a period of 3 years, there hasn't been more than 50% change in the underlying ownership. But these are all like very technical tax planning
Right.
opportunities that in very specific context or circumstances, those can come up. But again, tax is a good thing and not necessarily a bad thing. But the good thing about tax being a good thing is that the tax law itself affords you a lot of opportunities, because it was not God that wrote that law. It was a human being. So what that means is there are several opportunities for other like-minded human beings to identify, to ensure that your tax burden goes down drastically. And to conclude, I would just say, um, and I want to maybe quote from the Bible, a parable that Jesus Christ once said, that who goes into building without sitting down and counting his costs. So I think going forward, You don't undertake any significant venture until you have sat down to identify what cost or benefit that you get from that. The cost or benefit is not you being an engineer and you think you can solve a solution, you can provide a solution for a problem in the society. It's also how do you come about with that solution? Where do you put that solution? Who are the people that you partner with? How are you even going to finance your solution? Because if you don't do this analysis right at the very beginning, yes, you come up with the company, but you suffocate the company, and in less than 3-5 years, you go off. And I think Dr. Iddrisu mentioned a while back that in Ghana, if a startup goes beyond 5 years, then chances of you becoming a multinational corporation is very high. So it's usually the startup phase that you need to take the right decisions. So the cost that you set down to assess, make sure that tax expertise or tax considerations are included in there. And I want to sneak in a shout out for lawyers as well. Make sure that legal considerations are also part of the analysis that you do before you set out to do any venture. Because if these guys are there to guide you right from the very beginning, you can have a super smooth life and super smooth business. Thank you very much. So maybe
Thank
we
you
can open
so
it up
much.
for other questions.
Thank you so much. We had some generic questions we were asking, but we want to give importance to our audience. We have Mr. Enoch Wise, who looks like Dr. Enoch for me, having a question here. So I want you to attend. I don't know, but that's just how I feel. He looks like him somehow. Yes, he looks like him. We have
Can I ask the
Isaac.
question?
Yeah, the question is, I don't know why I'm not getting it. He said,
Because I couldn't write in full, so maybe I can ask it. Is that okay?
yeah, that's fine.
Yeah, sure.
All right. So the scenario I wanted to create is that when you're living abroad and
Yeah,
Mm,
maybe you want to send money home and
yeah,
you use the apps or the MoneyGram or Western
Western
Union, you are likely to, as you said, pay some taxes in the course of that transaction. So let's say I'm in the United States of America.
yeah,
I have some dollars I want to send to Ghana. And
yeah.
there is another Ghanaian in the US who has some Ghana
Currency.
cedis at home that will want to convert it to US dollars. Is it legal or right for me to, for the two of us to swap the money? So I give the person the US dollars in
In the
America,
state,
and then he will send the cedis on my behalf in Ghana. What do you think about that?
I think it's legal. Let the expert tells you because I mean,
Yes,
what's the difference?
there were instances in the public where some Nigerians found to be doing this
yeah.
transaction were arrested on under money laundering or whatever it is. But I
Okay.
just wanted
So
to see
yeah.
if you have an opinion about
So
that.
okay. So let me put it this way. This is not necessarily under the ambit of tax, but I'm going to respond.
Yeah,
So it's not a tax consideration. But before I respond, maybe let me say that sometimes planning your taxes does not necessarily involve like being overly creative, right? Sometimes it's a very simple thing. And I cited an example. One simple way to avoid some form of tax like VAT is just to walk to Kantamanto rather than go to the mall. Because if truly the Kantamanto woman will sell it for the proper gross amount, let's say 10 tomato for 50 cedis,
yeah,
and it's 50 cedis at the mall as well, it's 50 cedis at the mall plus
yeah,
levies and
taxes.
VAT.
Yeah,
You get it, right? So yes, sometimes you don't necessarily need to do something overly creative or something very formalized. It can
yeah,
be a very simple transaction with your sibling or family member. Like in the Ghana Tax Act, for instance, if you give something to a very close family member, what we call the nuclear family, like your
yeah,
mom, your dad, your daughter, your son, your sibling, those are exempted from realization gain taxes, right?
yeah,
So you can. if you trust this, you want to give something to your cousin, but you trust it to your sibling or this your mom, dad, daughter, son, that okay, this guy can actually take good care of it for the other beneficiary. You might as well just give it to the one who is close to you and manage it for the benefit of that nephew or whomever. I mean, you don't have to do something totally crazy. But to answer your question, is it legal? I think I'd rather say there is no reason to believe it is illegal. And I'll explain why. Number one, you are not allowed to engage in the business of foreign exchange trading until you are licensed. That is why anytime the BOG gets a bit flustered, they start
Go after
chasing
the
the
Aboki people.
Aboki, exactly. Yeah, because they are not licensed. It's not like what they are doing is illegal, but they are not licensed to do it. In your
So,
situation,
so
yeah,
Mr.
I'm not.
Oduro, Mr.
Sorry.
Oduro, as a researcher, I disagree.
Okay.
You are saying it's not that what Aboki people are illegal. It's illegal. Me, I'm a
Yeah,
victim. I came back from,
they are
but
not.
don't defend them.
They are not licensed. So
So
you are
it's
right. You are right. Yes, you are right. So the trading is not illegal. I'm coming.
yeah,
But then you need a license to be able
be
to
able to
trade.
trade.
Yes, I'm putting that in the context of what Enoch asked, right?
Yeah, it's fine.
So the point is that exchanging money with your colleague is not illegal. But if you are seen to be engaging,
In it.
or if it is deemed to be engaging in a business, then it becomes illegal. Do you
Illegal.
get it?
Yeah.
So let's bring it down. If it's something you do often,
Yeah.
there is evidence to show that you do it often. It will be very difficult for you to eschew the tag of you
Yeah.
are not trading. Do you
Yeah.
get it? So business is something that you do on a repetitive basis. So if this is like just a random act,
On something. Yeah.
I mean, you haven't engaged in a business because it's only when you engage in that business or that trading that
For a
now the
long
law
time.
will come and say that because you do not have a license, you are engaging in an illegal activity. So if you want to exchange it on purely random one-time
Basis.
basis. Don't make it a habit because the moment you make it a habit, it appears to be a business, and in that case, you could be penalized or prosecuted. Let me know if that answers your question.
Yeah, that's fine.
Yeah.
Thank you. So we have Mr. Abdurazak Yusuf. In fact, he was my teacher undergraduate when I wasn't an accounting student. He the minimum saw me through. So I'm sure he's kind of interested to see how this conversation will go.
Yeah.
He's a chartered accountant and he's asking a question with regards to the VAT. He said, with VAT, please, what threshold or conditions makes an individual opt for standard rated or flats or VAT flats or possibly zero rated?
Okay. This is quite technical, and
And can you explain the terms used there? Because for the
yeah,
ordinary
I will
person, we
explain.
don't even
Yeah.
understand that.
So,
Thank you.
Yeah, thank you.
apologies to everyone else if it appears that we are talking over your heads, right? So, Ghana is a very interesting economy. Um, yes, we are smart, but sometimes we even outsmart the people that we copy from. VAT
Yeah.
in every jurisdiction is super simplified, but in Ghana, we have different layers of VAT.
Mm-hmm.
But first, let me explain what a zero-rated supply is and what a standard-rated supply is. So in a sane economy, assuming Ghana was not this complex, a zero-rated supply means that item that you are selling or that supply that you are making, it could be services, is actually supposed to attract VAT. But because of a certain condition or character, we are only going to attach VAT of 0%. So it's not exempted from VAT. VAT is applicable, but we only attach VAT of 0%. And they do that for a reason. I'll give two examples. Number one is for a while now, we've noticed that ATL and GTP used to be solid brands when it comes to textiles here in Ghana. But now everyone is interested in Holland. Very nice designs are coming down, and people
Yeah.
are not necessarily buying the
Interesting.
GTP and the ATL again.
Demand has
So
shifted.
the government wants to now support the ATP and GTL business, and they say that okay, when you import your Holland, is it Holland, right?
Yeah.
Holland, like meaning Netherlands.
Yeah, Poland, yeah.
Yes.
So because they want to support the local textile, right? When you import the foreign one, you pay VAT on it. Okay, import duties, VAT, whatnot, right?
Mm-hmm.
So let's assume that if you import as 100 cedis, if they also produce as 100 cedis, but
Mm-hmm.
because you pay duties and VAT, let's say it will put it at 125. Now
Mm-hmm.
the government is trying to is trying to do something very smart to make GTP and ATL looks cheap in the eyes of
Ghanaians,
Ghanaians.
consumers.
So they say that instead of you applying VAT, which you ordinarily apply VAT of 0%.
Yeah.
So now when you add VAT of 0% to 100, it's still 100. Now everything else you import from outside becomes 125. If I go to the market and in my mind they are of the same quality, which one will I go for? ATL GTP. So zero rated supplies are really taxable supplies, but then the VAT rate becomes zero for a reason. Then the second example is usually things that we export out of the country are zero rated supplies. Why? Because you want to encourage people to ship a lot more out there so that you get foreign exchange, so that CD is stable and we don't always have to be running against the dollar, right?
Mm-hmm.
But then anytime your item enters, let's say the US of A, wherever, those people will add custom duties and they will add VAT.
Mm-hmm.
So think about it. If you add VAT here, it goes there. They also add custom duties and VAT. Your item or your export will be extremely expensive in those countries. So no one will buy them. Do you get it? So that is the essence of zero rated supplies. There are, I think, other examples for manufacturers and all. Okay, that's under relief, yeah.
Yeah.
But then,
Mr. Drew, I think you should also talk about the flat rating.
yeah,
You
I'll come to
remember?
that.
Yeah.
I'll come to
You
that, yeah.
remember the issue of you and I getting cars some time back when the Ghana government had reduced the importation, the taxes on importation to some level just to encourage
Mm-hmm.
people to. And I think it is more interesting because we are young people. Some of us are starting life, and then we are really interested in where we can start our first wheels and all this. So talk about the flat rates. The reason why we could bring our cars so that it was cheaper, and then Toyota Vest was maybe 50,000 and it's now getting to maybe 100,000 is because of adjustment in certain things. There was flat rating sometimes. I don't know
Yeah,
whether it was a political reason. I think we would want to get that as well before you
yeah,
answer his question.
yeah.
Thank you.
Okay, that's fine. So that is it. So that's essentially the difference between zero rated supplies and standard rated supplies, right? But now, so this is in an economy where there are not so many complications like we have here
Yeah,
in
the
Ghana.
things main
Here
concern.
in Ghana, we have different types of VAT. So now we are assuming that VAT applies. So how can VAT apply? So we have the zero rated VAT, which we've already talked about,
Yeah,
right? Then we have the standard rated VAT, which is VAT as standard rate, VAT with no modification.
yeah,
Presently, the Ghana VAT rate is 15%,
yeah.
but then it comes with its own babies. Comes with three babies. Number one is National Health Insurance Levy,
2.5.
that is 2.5%.
Yeah,
Same for Ghana Education Trust Fund Levy,
yeah, 2.5.
2.5%. Then
Okay.
finally, the famous
Cover
COVID-19 Health Recovery Levy, 1%.
1%.
Right?
Yeah,
So before VAT, anything that VAT applies on, these three babies will also apply. We call it VAT associated levies. They will apply first,
and
then
then
VAT, the almighty one, will apply. So that is standard rated supply. Then we have what we call VAT flat rate scheme, VFRS. The VFRS, and I think Dr. Iddrisu, you mentioned, you made some reference to that. So that was the earlier position, but I'll start from where we started from and now where we are now. Okay.
Yeah.
So earlier, I think the government just thought that, okay, we want to encourage people to manufacture and people to distribute, people to retail, right? These products that have been manufactured. And this whole VAT of, okay, 15% plus the associated levies, then the person will have to compare what they are taking for the government, what they have paid, then they will compare the differences, what they will give to government. Earlier, when I was talking about how businesses can take advantage of VAT, yeah, it involves a lot of like reporting and analysis, right? So the government said that, okay, we are going to make some industries very simple, because if it's flat rate, the calculation is very simple. You are going to buy something, the flat rate is, let's say, 3%. You just know, if I walk into this store and I buy, let's say, a mouse, I buy a monitor, I just pay 3% as VAT. And it's even easy for the suppliers to account that to the government. Was it necessarily useful? I have my reservations. But then the flat rate came, and 3%, it was applicable on those that distribute and those that retail goods. So if you had gone to Melcom around those times, Game, thereabout, ShopRite, then everything you buy, because those guys are retailers, everything you buy will come with VAT at 3%. You get it? But now, unfortunately, the threshold, back to the question that your former lecturer asked, the threshold is that you should be a retailer between 200,000, earning annual revenue of 200,000, more than 200,000, but not more than 500,000 Ghana cedis in a year. So between 200K and 500K, these are the only people that can charge VAT at a flat rate. And to us, the consumers, buying from someone that charges VAT at a flat rate is relatively cheaper or less costly than buying from someone at a standard rate, because that is like effectively 21.9%, and someone is willing to do 3% plus the COVID levy of 1%, 4%. People will pretty much troop there. But now it's not so easy to understand from the government what the focus is, because between 200K to 500K will pretty much cover SMEs. And this is income for the year. I'm just checking 500,000 Ghana cedis equivalent in USD. That's only $32,000, right? So I think the focus is really to just cover SMEs so that their costs or the price of their goods will not be so expensive. Now, that is
Yes.
not the only thing that we apply flat rate on. Now, there's also flat rate on real estate developers when they sell their building. Those ones to go for flat rate. So it won't go for the very outrageous 21.9% VAT plus levies rate, but it will go for a flat rate. I'll have to confirm that. I think it hovers between 5 or 6%. Yeah, I'll confirm that and maybe share with the team. We can put on the page. But final comment to cover what you just mentioned. What the government did was that they wanted car manufacturers is the wrong word here, assemblers, to come down here to Ghana, okay, and assemble cars, motor vehicles. So the likes of Volkswagen, so that they can sell to Ghanaians. So these guys have been afforded some benefits, whether the item that is coming in is semi-knocked down or fully knocked down parts. And so those are the guys that get the benefits. But in the end, it affects us as well, because if their cost is relatively lower, what that means is the final motor vehicle price for us will also be relatively lower. So unless you are in the medical field where they have a special dispensation, when you are importing, you pay the normal VAT as an individual. But then if you work to Volkswagen and buy from them because they got some benefits by importing
Apologies.
semi-knockdown kits and completely knockdown kits. Um, and you get that benefit in the form of reduced prices, but
Yeah.
it's not you getting that. Yeah. But this was a very technical question. My apologies.
Yes, because
Response. Yeah.
he's a chartered accountant. I know what he wants to do, so
Yeah.
don't mind him. But it's very useful because at the end of the day, we have learned that a specific tax can be applied depending on where you are operating.
Yeah.
And I think that's insightful. Thank you, Mr. Oduro, Mr. Razak, for bringing in the technicality here. But we the dummies. So that's just it, but we would have some few generic questions to Mr. Drew to scale it
Yeah,
up.
I see Enoch mentioned that maybe we should have a second session. So maybe what we can do is let's take time to collate all questions.
Yeah,
Make time for those that will watch this video
yeah,
after the live session to also put down their comments.
yeah,
Then once we have all the comments, maybe we can group them because some of them may be quite similar.
yeah.
Then we can have another question specifically to respond to the
So
questions because I think we
that's
already
fine.
did more than 1.5 hours. Yeah,
Almost 2 hours.
people
That's
need to
okay.
prepare for the office tomorrow.
Any concluding remarks from you before we wrap it up?
Okay, I think the only thing I would just say is essentially the parable from Christ Jesus once more. No one takes up a venture until the person has sat down to calculate all the
Yeah,
costs. And it will be my advice that before you set out to do anything massive, buying land, buying a building, even going for a loan,
yeah,
something significant that is life changing, starting a business,
yeah.
make sure you get an opinion from
Yes,
a tax specialist or a tax advisor before you set out to do whatever you are doing. Because just a statement from that person will change your fortune. So it's helpful that in your quest to maximize your wealth, you consider these as expediters to increasing your wealth. Thank you, everyone. Yeah.
thank you, Mr. Dixon. Just a concluding remark. I'm sure everybody there is so much value for spending our time here this evening. And I'm very sure my introduction was what way lower than what we have actually benefited. In fact, I think we had some more conversations back door. We have learned, we have relearned, and we have unlearned. And I think you and I, for me, I have about a lot of benefit to start applying for to claim. I'm sure the same thing. And I think the biblical verse sum it all that we don't do anything until we sit down to do the proper planning. Because we don't do that, we will still come back to the planning stage, right? And then there's no reason to go back and come back again. When you are set up for a journey, get prepared and get people on your team that matters. We do not, as Africans, take this serious. And that is the many reasons why SMEs, even us, fail. We just get up and see somebody is this, I want to become, without consulting. In fact, I call it the literature. What goes into it? There's always going to be an opportunity cost. Maybe just speaking to Mr. Dixon could save me a lot. But maybe because my husband allergy think he has money and then he's 50 years, he can just get up and start doing whatsoever. When he could actually use me, who is not 30, to get so much tax benefit so that we could what, enjoy our life later. This evening, we are so grateful to Mr. Dixon. And as he mentioned earlier, tax is a broad spectrum. This is just a tidbit of it, and we aim to come back here to talk about all that matters. In fact, in relating to our jurisdiction, we are young people and you know how hard things are here. And if we get situations like this that pointed out to us, look, if you do this, do that, you could actually navigate certain things and use that benefit to do something. I think that is just, and what is interesting is the young people want to help the young people because we are the generation. So we say a prayer for Mr. Dixon, Elum 360, Dr. Enoch, for putting this together. We are so grateful to everybody who joined in, from Miss Ajua, Mr. Loud Kumsing, Mr. Abdurazak CA, Mr. Boachi, Marjana Iddrisu, my little sister. I mean, everybody, those we can mention that we are grateful. We hope to have this. And do not leave here except you have subscribed to Elum 360 and share the link with your friends and family. We are begging you. We cannot progress if we do not have the numbers, right? And people are dying out there needing this help. They will not pay the expert, but the expert is here that come for the information for free. Please share to your loved ones because the greatest gift you can give them is education. I mean, what else? So thank you so much for being here with us. We are so grateful and we hope to do this. I think Mr. Loud Kumsin is a finance person. I'm not too sure, but that's how I think I've met his profile somewhere on Facebook. And we would be bringing people like him to our platform where we would educate and inspire for our generation. Thank you so much, everybody. Mr. Dixon, I invite you to my house for hot Zafi this evening because you
I'm
did
going
it
to
all.
follow him.
No, you did it all this
Please send
evening.
live location.
And may Lord Jesus Christ keep you and continue to elevate you in ranks. Good
Thank
evening,
you.
everybody, and we'll catch up again later. Thank you, Dr. Enoch. I'll send your own thank you later. You are not invited to my Zafi party.
No problem.
Right.
All right, maybe just to pass out this information to our listeners. Actually, we had a section on investment, right?
Yeah,
So there were people within the speakers that I spoke to about task, and, and they recommended Dixon, two of them. And Dixon is an alumnus of UCC School of Business.
good,
He's quite young but experienced and exceptional. I met
good.
him. I met him in Prague mid last year, and we had a talk. So when it came that we needed somebody to be our guest, it was easy to reach out to him. Otherwise, he's a very, very busy person, but he made time to educate us. And so I think we can work together and see how best we can make the second part interactive. Thank you very much, Doc. You did a
Amen.
great job as well.
Thank you. We're grateful. Good evening, everyone. Bye.
Bye.